We'll continue our coverage at Freedom Fest 2023 in Memphis, and here with us is a leading authority on tax reform. He is Grover Norquist, and he is the president of the Americans for Tax Reform. Welcome to the show. Pleasure to speak with you, Grover.
Good to be with you.
Let's start by talking about some of the themes of your book. You're here to sign a book that you've written about the IRS. So it's an extensive book. Sum it up for us. Why do we need the IRS, and why don't we need some of the features or services offered by the IRS? Let's put it that way.
Well, you need something that collects taxes, but the higher the rates, the more difficult it is to collect taxes, the more complicated, the more difficult. And so we could reform taxes to reduce the number of IRS needed and the violation of our privacy that the present tax code demands.
What do you mean by violations of privacy? Can you expand on that?
Well, if they have a death tax, they have to know everything that you own on the day that you die, which includes the gold in your teeth, your car, all that stuff. But if you don't have a death tax, you don't have to know any of that things. The government doesn't have to have that information. You want the government to cost you as little in money, time, effort, and privacy, and all of those are costs of any tax collection scheme.
Speaking of the IRS, you're aware that they added headcount in the most recent year. Can you comment on why that's perhaps necessary or not?
It's not necessary, and it's not deserved, and it shouldn't happen. The Democrats, when they had the House, the Senate, and the presidency, the first 2 years of Biden, voted to hire 87,000 new IRS staff for $80 billion. It's supposed to take them 10 years to do that. In point of fact, they need to be reformed before you ever think of rewarding them with more staff. Little things. Right now, less than half of the IRS agents come into office ever. Who knows that when you call the IRS and they don't answer your phone for an hour at a time when you call in, is that person sitting at home by the pool not answering your phone? Or are they at least being supervised when they refuse to answer your phone? The IRS has 5 million rounds of ammunition. Why? 4,500 guns and people that are supposed to be using that. But they are so poorly trained and don't know what they're doing that the Inspector General found that the IRS, when they pull the trigger, more than half the time it is a mistake. By mistake, they're hurting themselves, somebody else, destroying property. They're not shooting at bad guys. They ought not to be allowed weapons. If they need a policeman to go with them to visit somebody's house, they should do that. But an armed IRS is a mistake, and they've shown they can't even manage that.
This wasn't a response to perhaps increases in financial crimes in the country?
No, it's not. Look, they're not answering the phone when you call, so they're not deploying their people well. We've simplified the code. The tax cut of 2017 said that, we dramatically increased the personal exemption so that most Americans don't have to do any difficult filing and show up with paperwork and give them receipts and so on. It's only about 7% of Americans that have to do a full-fledged return. We've made it a lot easier. The IRS, we need fewer IRS agents. It's not more.
If you could wave a magic wand and eliminate any of the taxes currently in our code, what would it be?
Well, I think we should tax income one time. Okay. What we do now is we tax it when you earn it, when you save it, when you invest it, when the company you invested in earns money, when you get a capital gains tax, and if you're stupid enough to die, they take half. Back that down. No tax when you die. Okay? No tax when you save and invest. When you earn $1, they tax it, and then they go away, and they don't have to bother you again about that dollar. You want to drink it? That's your business. You want to, go on a car ride? That's your business. You want to invest it in Microsoft? They don't get to come back and steal the rest of your money because you invested in Microsoft. We don't want to discourage investment and entrepreneurship. You should only tax income one time when it's earned and then leave you alone.
What about the double taxation for when you move abroad, earn income abroad?
We are the only country, with the possible exception of Eritrea, that taxes the incomes of its citizens who learn or earn and work abroad.
Right.
And we could have many more Americans working overseas. The American universities in many other countries don't have Americans.
What's the logic behind taxing Americans when they're earning income abroad?
Well, it wasn't that long ago when there weren't that many Americans overseas. And so it wasn't as big a deal. But now there are several million Americans working overseas. The actual number, I always get a hard time getting my hands on, but it's millions. And France tax you if you work in France. And then the Americans want to tax on top of that? What is that? First of all, you're not providing any services for the person when he's in France. And two, when French people work in the United States, we tax them. And then, but France says, come home, bring your money with you. We won't tax you. We'd love to have you back and your lovely money when you send your money back. We should be happy that there are Americans earning money abroad that then send it home or bring it back home with them. We shouldn't penalize that. We should have residency-based taxation. You earn $1 in the United States, you pay tax. You earn $1 somewhere else, you don't pay us taxes.
Right. So is that an issue of the U.S. just making more tax treaties with other countries, or just changing that code altogether?
Oh, we could do that. The United States, all by its lonesome, could say,
okay,
you know what? We tax you when you earn it in the United States, not otherwise, like other countries.
Okay. Well, domestically then, how do you feel about a flat tax rate across all income spectrums?
I think a flat rate is one of the most important features of an income tax. A single rate tax, where you tax income at the state level, maybe at 3 or 4%, at the federal level, somewhere between 15 and 20. You get a single rate tax. The advantage isn't that it's fair. Taxation is taking money from people who earned it and giving it to people who didn't. Fairness is not part of this.
Okay.
But a single rate tax is difficult to raise because the politicians have to say, I've got a great idea. You're all paying for it. Well, if we're all paying for it, we're all listening. What's the idea?
Right.
Oh, it's not that good an idea. Politicians have a hard time raising single rate taxes because they have to look everybody in the eye and say, I'm raising your taxes. What they like to do is what Clinton did, Obama did, and Biden did was, oh, I'm only going to tax 2%. So you guys might want to step out of the room. This is going to get ugly. But it's not you. It's just them. Then, of course, having gotten elected, they turn around and tax the energy everybody uses, tax companies, which is paid for largely by workers and lower wages.
Yeah.
So they don't keep their promise of only taxing the few. But a single rate tax, you have to raise everyone's taxes at once, which is difficult. And the good news is when you cut taxes, everybody gets that we're going from 5 to 4. I understand that. That's fair. That's even. Well, the guy with $1 million, well, he's 5 to 4. I'm 5 to 4. The guy with fewer, less money, 5 to 4. Yeah. 5 to 4, done. So flat rate taxes are good because they're hard to raise and easy to reduce.
Do you have any thoughts on the Laffer Curve, the idea that at a certain point, a certain tax rate would optimize government revenues?
Yes, but the goal is not to maximize government revenues.
Okay.
The goal is not to be on the wrong side of the Laffer Curve.
Okay.
So if you do like this, right, there are 2 points that raise the same amount of money. You want to be at the lower tax rate that raises the same amount of money.
Why is that?
Not the higher tax. Because the incentives to work, save, and invest are much better.
I see. Okay. How do you feel about the elimination of inheritance taxes?
I think you should abolish the death tax. It's ridiculous. It's money you've already paid taxes on several times. And the lack of privacy to somebody dies. The government comes in, we're going to take half of everything that you own. They have to know everything you own, every bank account you have, every car that you have, the gold in your teeth. I mean, the government shouldn't be violating people's privacy to that end.
Right.
2, you already taxed me when I earned it. What's this showing up again and taking more? So no, and most of the tax, in terms of the general economy, when you tax death tax, by definition, you're taxing the person's life savings.
Right.
It's it's a tax on savings. This is exactly what you don't want to be taxing. Savings and capital allow people to create jobs and opportunities. You don't want to destroy capital. That's what the death tax does.
Okay. Interesting. And all the capital gains taxes, why is it that capital gains are taxed at a different rate than just income? I mean, if you if you sell your investments, whether a stock or bond, whatever asset you have, wouldn't that just be part of your personal income and you should roll that into one?
Well, except people recognize that you're taxing income that you've already paid taxes on once before. You earn $1,000, you pay taxes on it. You invest what's left in land over time. That's now more valuable.
Right.
Well, what you're doing is you're taxing that original money as it's invested a second time. So the proper capital gains tax rate is 0.
Yeah.
But we have a differential rate because people realize it's wrong and economically destructive to have a high capital gains tax. When we took the capital gains tax from 50 down to 25, we saw a tremendous increase in the amount of revenue the government got from capital gains because people sold things more quickly rather than held on to them. So it's bad for the economy to have a high capital gains tax. It's unfair to citizens to have a capital gains tax at all.
Hypothetically, if the federal government were to eliminate completely personal income taxes, which is the model that some other countries follow, the UAE, for example, how could the government make that money back? What other revenue streams could they pursue?
Well, the one that they'd likely do is a value-added tax. That's what Europe does. The value-added tax has the challenge that it's a hidden tax. It's hidden inside the cost of everything you buy.
Right.
So unlike your income tax where you write the check on April 15, you know what it costs you. They, in fact, hide it in the price of all goods and services. So I think a single-rate income tax, the tax is income one time, consumed income, is the best way to do it because it's clearest to voters what they're paying. The VAT, the corporate income tax, are ways to hide how much you're paying. Oh, it's in the price of everything. Then I don't know how much is product and how much is price. That's what the VAT does.
Okay. For a long time in your career, you've advocated for a reduction or a complete elimination of excess taxes on the wealthy. Tell us why that's necessary.
Well, I think we should not have a graduated income tax system where you tax somebody a different rate based on how much they earn. That leads to and promotes envy, which is destructive of human civilization. So I think it's very important that you treat people the same. You have a low tax rate. You tax income one time. Because to tax income more than one time, when you save it, when you invest in a company, why does the government need to know if you have Microsoft stock? It's none of their business. No. Tax my dollar when you earn it, go away.
All right. I'm going to give you a loaded question now. How would you respond to the argument that one needs to achieve, or a country needs to achieve, more or less income equality, to eliminate income inequality and achieve income equality? And one of the ways to do that is to introduce a gradual tax system whereby the rich are taxed at a higher rate because you're taking excess wealth from the wealthy and you're giving it to people of lesser means.
Okay. When the government, Obama, said the big crisis in America is inequality, when did he say that? Oddly enough, right about at the 50th anniversary of the failure of the war on poverty. So for 50 years, the Obamas of the world said, we know how to end poverty. We'll write people's checks, and then they won't be poor. And they'll develop middle-class values because they're not poor, and then everything will work, okay? And they told us for 50 years. They spent, I don't know, $17 trillion. And what do they have to show for it? People's health isn't better, their ability to earn income themselves is not improved. They've, in fact, made people dependent and damaged the families that they thought they were helping. So after 50 years of failure, instead of going, that didn't work, they go, oh, we don't care about poor people, because they used to tell us they knew how to fix poor people, except 50 years, $17, $20 trillion didn't work. Now, new goal. Lack of equality and inequality, that's the new problem.
Right.
Oh, it is. Yes. And the great thing about inequality is you can make people less unequal and never help anybody. Nobody has to get better off.
Right.
All you have to do is shoot the 10 richest people in America and there's less inequality. Or tax them to where they leave the country and there's less inequality. Nobody's better off. So they've set up for themselves a new goal. And of course, there's no end to inequality because you can't make everybody equal at some point. There's always people doing different things. So they're never going to run out of a job. They'll never be asked, did you do what you're supposed to do? And they never have to improve anybody's life. You can have a much poorer country that's much more equal. Like the Middle Ages was a good example of everybody was pretty equal. Even the king, didn't have toilets or a car or air conditioning.
Yeah, well, he certainly had more land. I don't know how taxes worked in the feudal system, but Curve, was there any evidence at all during your research to indicate that providing the poor with better health care, social services, welfare would increase the odds of increasing their living standards, perhaps their children's living standards? And to do that, we need to raise higher taxes.
So we've done 50 years of that. It didn't work.
Okay.
Didn't accomplish that. The three things you have to do to move ahead out of poverty is graduate from high school, wait till you're married or 21 to have children, and get a job, any job. You
don't need to go to college for this?
No. If you do those three things, you won't end up poor. It doesn't mean you're going to be rich, but you won't be poor. And when we give you money, a lot of those people end up poor.
How do you feel about the, speaking of education, the Biden's plan to eliminate or forgive student loans?
Biden's plan was to remove the student loan repayment requirements from the people who'd been given the money, who'd borrowed the money, and put them on the shoulders of the rest of Americans. He wasn't abolishing the debt. He was just shifting who was going to pay it.
Right, okay.
From the people who benefited to the people who didn't go to college or paid off their debt. It was a straight political ploy. I will buy your vote. Vote for me. I will give you $20,000. That's a pretty good payoff. It used to be like $10 to go vote, but $20,000 to vote is much more impressive.
Corporate tax. Let's close off with corporate tax. The U.S. actually has one of the higher corporate tax rates of the OECD countries. There's recently been a plan amongst G7 countries to make everything 15%. I don't know if that's going to be taking into effect anytime soon. But what is your view on having the same corporate tax levels for all your peers? Would that give the U.S. an edge if our corporate tax rate were the same as the UK or Germany or Japan?
What the Europeans want to do, and what Biden wants to do, is have a minimum corporate tax. So nobody could do what most of Eastern Europe has done, was had 9 or 10. They want it up at least to 15. And of course, it'll start at 15.
Right.
And it'll end go to 20.
Right.
It'll keep going up. And by setting up a cartel of tax collectors, kind of like OPEC, you can keep taking that up as high as you want if you're really going to enforce the cartel of higher taxes. The United States is capable of having not just the 21% rate we have now, and we were at 35, highest in the world.
Right.
Then we went to 21. Europe is 25, stuff like that. It's Eastern Europe, lower. And the Europeans want to slap around Ireland, which was 12.5. Can't do that. Liechtenstein, which is like 4%. Eastern Europe, 8, 10%. And make everybody go to 15, then that's only a starting area. They will move that up. So what the United States should do is, and again, Congress is going to refuse to accept that. The Hungarians said they were going to refuse, but they got a lot of EU money, so then they didn't object, unfortunately. But Europe agreeing to do that won't solve their problem unless they lock American taxpayers into getting damaged by that.
Is there a relationship or any sort of correlation that you've noticed between the corporate tax rate and value added to shareholders of a public company?
Oh, absolutely. The lower the corporate income taxes, the better off the companies do. As soon as they announced we were going to 21%, down from 35, highest in the world, 35, 10% higher than China. Higher even than Japan. Japan was at 30, and we took it down to 21.
Right.
That made us much more competitive. The investment flowed into the United States. It was very, very helpful to our economy, and we should keep reducing the corporate income tax as dramatically as we can. all the corporate income tax does is hide who pays it. It's paid by workers in lower wages and consumers in higher costs. And they go, oh, we didn't hit you. Yes, you did. Every time we go to the store, we pay for the corporate income tax on the grocery store. If you work at one of these places and the corporation has higher taxes, if 70% of most corporations' payments are for labor, and you take $1 million from a company, what percentage of the reduction in cash they have will come out of the pockets of the employees? 70%.
I'm going to give you another liberal argument. I just want to respond to this. Raise taxes on corporations, give that to the poor. They have more money to spend and buy things.
But that solves what problem? By taxing companies higher, you discourage more investment, more job creation. You hand money to people for free, you discourage them from going to work. I mean, one of the reasons with people who have been so slow to come out of this recession, the government-induced recession of the reaction to COVID, is that there's so much money still being sent to people for not working. And that makes it's difficult, I mean, to decide to go to work if you're going to lose your welfare benefits. That the amount of money the average family of four gets in the various welfare programs is about $34,000 a year. Why would that person go to work?
Well, the question would be why would you need them to go to work if they just have the money then? Because
we want them to work so they stop living off other people's income. That's why. So they can have some self-respect and dignity where they're in charge of their own life and they can tell anybody they want to go to Hades,
right,
because they're independent human beings running their own lives.
And that would make a more productive society overall if we...
Yes, and a more pleasant one. And, you know, the kids will respect them and grow up to get jobs too.
Okay, excellent. And finally, what are you working on these days? How has your advocacy program changed in terms of priorities now versus maybe during your Reagan days?
Sure. Big focus on states. So many states are open to tax reduction and tax reform.
Right.
And there are 20 states that we're actively involved in making some real progress on tax reform. At the federal level, it'll wait until you have unified government, either Republican, in which case they'll cut taxes, or Democrat, in which case they'll raise them. But as long as it's, you know, Republican House, Democratic Senate, Democratic President, nothing really bad can happen. Nothing really good can happen.
Okay. Well, where can people follow your work?
Americans for Tax Reform is our website, atr.org. I tweet at Grover Norquist.
Okay. All right. Thank you very much. Thank you. Appreciate
Thank you.
The show. Thank you for watching. Stay tuned for more.